Good morning, everyone. I'm Harika, student of SGI's Food and Agri Business School from the 24-26 batch of PGDM Agri Business Management program. It gives me great pleasure to welcome you all today to today's insightful session on the future of microfinance, innovation, regulation, and impact. As we explore the evoking landscape of microfinance and its role in driving inclusive economic development, we are truly honored to have with us visionary leader whose work is shaping this very future. Please join me in warmly welcoming our distinguished guest speaker. Ms. Purvi Bhavsar, co-founder and managing director of Pahal Financial Services Private Limited. A warm welcome to you, ma'am.
Thank you.
Thank you, ma'am. Ms. Purvi Bhavsar is a first generation entrepreneur from Ahmedabad and the co-founder and managing director of Pahal Financial Services Private Limited, a leading non-banking financial services working in the domains of microfinance and enterprise lending. With an impressive professional journey spanning over 29 years in the banking, financial services, and telecom sectors, Ms. Bhavsar has held leadership roles at some of the India's most renowned institutions like Kotak Mahindra, HDFC Bank, ICICI Bank, Vodafone India. Her diverse expertise covers a broad spectrum like corporate and retail banking, consumer finance, stock broking, distribution, and customer service. Her achievements include being recognized as among the top 10 women in the finance in the year 2020. Beyond corporate success, she has also been a champion of entrepreneurship and innovation. She was part of the Goldman Sachs 10,000 Women program at IIM Bangalore and recipient of Stanford Seed India Scholarship. She continues to mentor startups, especially in the fintech and impact space through initiatives like Stanford Spark and Buddy IIMB programs. With her deep insights into the regulatory landscape, grassroots innovation, and social impact, we couldn't have asked for a more fitting speaker for today's session. Let's now begin this much awaited interaction session.
Okay, great. Thank you so much for that very detailed introduction, Harika.
Thank you, ma'am.
Um, and good morning to all of you. I see people are still joining, but I don't know if this is mandatory for them to join or this is more of a, people who are really interested in exploring newer things and learning more. But nonetheless, a very interesting subject. And I will, in 1 hour, I will try and talk for about 30 to 35 minutes. And then we keep about 20, 25 minutes for interaction where you can ask me questions or we can discuss whatever you think, will add value to this forum and to uh, people who have joined this webinar. So I'll very briefly talk about microfinance before I share something which is, more futuristic and something which is, uh, maybe different because you would have not possibly heard a lot of this before. So when we were discussing about the subject that we should be taking up for this webinar, Veerbhadra had come up with this suggestion and I really liked it. But when I started working on it yesterday, I was just preparing my presentation. I thought, since we are talking about future, let us not restrict myself to, something that we can see, hear, and read almost on a daily basis in newspaper, in a lot of articles and everywhere. Since we are talking about future, I also wanted to give more macro view than just a micro view of what lies in future or what are the potential and possibilities. And since a lot of students are a part of this forum, I thought it will be very interesting for them to plan their career and explore a lot of new opportunities that might come their way. So very briefly, I will talk about microfinance and then I'll take you through something at a macro level. So microfinance, as the word suggests, is a very small finance or small value financing that we are talking about. This concept was originated by Dr. Mohammad Yunus, and he got Nobel Prize also for that. And that is called Grameen model, where essentially you are trying to empower a woman in the family. Because traditionally, man is a bread earner for the family. But when woman starts contributing economically in the family, that goes towards better future. So family is able to spend little more on the health. Kids can go to a better school. They live in a better condition. So if the family has to move to the next level, family has to progress. When woman starts contributing economically, the possibility is much higher. That was the idea, or that is the idea behind microfinance. When woman starts contributing and she becomes empowered, she is truly empowered. She is heard in the family. The cases of violence and all that also goes down. So that is the idea where microfinance is essentially trying to bring women in the mainstream and contributing to the economy. So microfinance, of course, started in Bangladesh. This concept of group loan originated there. The idea was that the vulnerable population or the financially excluded population, and particularly women, who is even lower in terms of the financial inclusion parameters, um, they don't have any collateral to offer. So how do they get funding from the mainstream financial institutions, and how do they start something small on their own, whether it is buying a cattle or starting a small kirana shop in the rural geography, or doing some small trading activity. These are the kind of things. So for them, the capital was always a constraint. And because they don't have anything to offer as collateral, that's where the microfinance came in, where if you cannot offer any physical collateral, you can offer social collateral. And microfinance works on the concept of group liability, where there is a group of, say, for example, 5 women would get together, and because they don't have any asset to offer as a collateral, they will offer social collateral, where they will stand as a guarantor to each other. So if one person is not able to pay, the others will make good that payment for a while, and then eventually they will settle it among themselves. With that concept, the microfinance started, and we have also seen a lot of evolution happening in last 25 years. Uh, when microfinance was happening more as a part of out of trust, and not sort of very RBI regulated entity kind of a thing. So it started as a uh, you know not a regulated entity, but run by the trust as a part of their one of the many agenda that they were doing. But eventually, when it came to scaling it up, anything which you want to achieve at a scale, it has to be sustainable, and it also should be able to attract the mainstream capital. Unless you are able to do that, the business does not become scalable. And if it is not scalable, it will not create the impact that it is likely to impact. So with that as a background, RBI also chipped in. Some crises have also happened. 2010 Andhra Pradesh crisis happened. After that, RBI also came into picture, and they created a very strong regulation around this entire business, so as to ensure that the rules are very well defined. And since you are dealing with the vulnerable communities, you are not doing any injustice to them in terms of whether charging the right kind of a rate of interest, or not doing too much of over leveraging, or customers don't get into over borrowing or over indebtedness. So a lot of regulation along with the credit bureaus came into picture in about between 2010 and 2015. And that is the time when this sector really grew from a small niche, very good to have kind of a business, to a mainstream scalable business. A lot of microfinance companies also got listed on the stock exchange. A lot of mainstream capital, a lot of impact investors. Some of the biggest funders in the world have also you know invested in a lot of Indian microfinance companies. So the portfolio have really grown from few thousand crore to 4,25,000 crore. That was as of March 24. So that has now become really mainstream. So that is the brief background of how microfinance has evolved, and what purpose it is serving. Um, I will now share my presentation, which is more on how financial inclusion, why financial inclusion, what is happening on technology, which are the sectors which are likely to grow uh, by 2030, where is the focus, what will happen when we are trying to chase our dream of Viksit Bharat by 2047. So all of that I will try and cover. Is my screen visible now?
Yes, ma'am.
So I will start with, and this is more how financial inclusion, which is, and microfinance is sort of a subset of the financial inclusion agenda. When the future is about digital lending, everything going digital. So how this financial inclusion and microfinance is likely to shape up, in a near future and in a long term. So, what is India's vision of financial services? Because microfinance is also now, uh, you have a category which is NBFC MFI, and also a part of RBI's many RBI's list of many categories of the non-banking financial services companies. So microfinance also is a part of that big universe where uh, the financial services is seen as a huge potential, whether it is banking, NBFCs, and now a lot of fintech companies also being part of that universe. So what is the vision of the government for financial services? And the first thing in that vision is financial inclusion, followed by digital payments, technology integration, sustainable finance, which is going to be a huge, huge, huge thing in a very, very near future. How to create enabling regulatory framework if you want to do all of the above, and how keeping all the elements in mind, how the overall financial sector will grow. These are the priorities defined by the government of India as a part of their vision for the financial services. So in that vision, I'm trying to focus more, which is closer to the microfinance, which is financial inclusion. And uh, why financial inclusion is so important, why government is focusing so much on financial inclusion, or why they have to create a category of NBFC, which is like sort of only catering to the customers whose income is less than 3 lakh rupees. That is what the regulation is all about. So financial inclusion is not just we are trying to cater to one particular class of, say, only women or only vulnerable section of the society, but overall financial inclusion is very important if you really want to grow as a country, if you want to really grow as an economy, uh, for sustainable economic growth, because currently the growth is quite skewed. And if you want to become a Viksit Bharat, you want to make sure that everybody is contributing. Unless that happens, and that is not just, a certain percentage or certain part of the population, but also the contribution of women increases. And that I'll talk about that, in the subsequent slides. But financial inclusion is extremely important if we want to achieve our dream of Viksit Bharat, for sustainable economic growth, for reduction in inequality, and for elimination of poverty and increased shared prosperity. And this is not just important in the Indian context, but at a global level also. If you look at the SDG, which is Sustainable Development Goals, which is defined for 2030, this is considered as one of the most prominent enabler for achieving all the other goals. And this is SDG 7 in the list of all the 20 goals that we have set for the world to achieve. So in the Indian context, how do we go about seeing how financially included we are? And what progress have we made year on year? And what is the number that we are targeting? And how we are going to achieve that target? And what does financial inclusion mean? So, it's a very fancy word. Everybody keeps talking about it. You see these in a lot of government policies, all the documents, whether it is a budget, whether it is, the report that comes a day before the budget. Everywhere you see that, government is talking about financial inclusion. But what does this financial inclusion mean, and how is it measured? So there are three components when we talk about financial inclusion in the context of India, and it has got three basic parameters, which is access, usage, and quality of the services. And this includes not just the lending, but includes overall banking, investment, insurance, postal services, and pension. So the if you are looking at a future, the future is not just giving some small value loans, but the future is about how do you create a society where people are saving, they are also uh, able to do something on the pension, so there is some sort of a social security. There is insurance, not just given by the government as a free measure, but also people are covered on a lot of aspects, including a lot of things that can be covered on the climate side, whether it is crop, whether it is your cattle, whether it is your house. So a lot of those things also are part of financial inclusion, and it's a much bigger and wider subject. Um, and where we were in 2017, we were at a very, very low financial inclusion percentage. We were just 43%. And from 2017 to 2024, in about 7 years, we have moved to 64% on the financial inclusion index. This is an annual report that is published by RBI and Government of India. I think it gets published in every April. So the 64% is the last year 24 number, and 25 numbers should hopefully be available very soon to us. So basis this financial inclusion thing, and we are very well aware about how the Jan Dhan accounts have worked for us. If we would have continued to do what we were doing for so many years, it would have taken us another 47 years to achieve 80% of the adult population having a bank account. What we achieved in Jan Dhan in 5 years or 7 years, traditionally, if we would have continued, it would have taken us another 47 years to reach that level of penetration. And this is just small example, because once the bank account is open, it opens a lot of opportunity for this set of people, including their ability to borrow in future. And I will talk about that also later as to how this is getting connected. So when we talk about technology, this is like a jigsaw puzzle. So you'll have to put all the puzzles together to create that impact that we really want to create. Also, there was a change in our philosophy or our target. Earlier, we were chasing that every household should have an account. From there, we have now moved to every adult should have an account. And we have done a fantastic job in at least opening the account for all these people. Now, 78% of the people, the adults in the country, has a bank account. And this is very close to the average of the world, which is about, I think, 77%. How is India doing on some of these parameters, which futuristically is going to be very critical uh, for the financial services? So the adults with a formal financial institution account with a formal financial institution, which was just 35% in 2011. And this is a World Bank data that I'm sharing, because some of these parameters also can be compared with the global averages. So some of the interesting things here, I am not talking about each of these parameters in the interest of time. But we have done a great job in terms of opening the bank accounts. Also, we have done a excellent job in terms of the digital transaction, made or received a digital payment. And this data, which is available with the World Bank statistics, is available till 2021. But we have made a huge progress after 2021. And when the next data gets released, I won't be surprised that this would have at least crossed 50-60%, where people are digitally transacting. From the future of microfinance and the larger financial inclusion point of view, how we have created some of the critical infrastructure that will enable us to do a major progress on the financial inclusion index that we have been chasing. So a lot of common service centers, and I don't know how many of you have even heard about this or how many of you have experienced it, but this is a huge brick and mortar common service center infrastructure that is created in a lot of rural areas where you can get your Aadhaar card, you can do a lot of transactions, a lot of subsidy schemes are available. So this common service center platform has come up as a very robust platform where a lot of transactions can be done, a lot of schemes can be implemented and can be facilitated. The other thing which I'm sure all of you would have heard about is a JAM Trinity. It is very popularly known as a JAM Trinity, which is Jandhan, Aadhaar, and Mobile. These are the three pillars of the robust growth that we want to bring in for the financial services. The Jandan account have enabled the bank accounts and hence the transactions. Aadhaar has helped us create a very unique identity number for all the schemes, whether you want to avail uh, the government schemes or you want to go in for any funding requirements for your individual requirements, and mobile for doing a lot of digital transactions. And I think more or less the entire adult population is more or less covered with the mobile services. The reported numbers, I think this has also increased now. This was the last available numbers created on a dashboard by the government. There is a e-service platform created by the government where around 2,000 services are available. Then volume of UPI transaction in number and values is only increasing day by day, and trillions of transactions are now happening on UPI platforms. So the creation of this digital public infrastructure, UPI has been one of the most critical piece of that entire infrastructure bit. Then the Aadhaar, as I already spoke about, something on DigiLocker, which makes your documentation, your KYC layer. So actually government is creating technology. It is called the India Stack, which is identity layer, payment layer, and the data governance layer. So these are the three layers that is being created, which can eventually, help do the financial inclusion agenda. The network of optical fiber, which we generally don't talk about, when we talk about the financial services. But because of this network being available, the financial services in the remotest corner of the country is possible, and it is going to become much more stronger and much more robust in the days to come. And how this technology and data is helping address the problem that we are talking about. So technology has played a very important role in transforming the way how the services are being delivered. So historically, we always saw that the banks with a proper brick and mortar structure, branches available in certain geographies were only catering to these customers. Now, reaching out to those branches, the timings, the kind of data that the documents that was required. Uh, all those were a huge challenge. And as I already said, that if we would have continued with the same kind of an approach, it would have taken us another 47 years to open the number of accounts that we have opened. So because we enabled a lot of digital public infrastructure, the way the services are being delivered is changing. And this has a huge impact on how going forward, even the microfinance will be delivered. Uh, Secondly, the accessibility. Uh, in spite of the best efforts, there is a lot of limitation, and I'm coming from my own experience of working for very long years with the bank. How difficult it is to open one branch versus how easy it is to appoint now in a new context, whether it is a CSP, which is a customer service point in remotest of the geography. It does not take 1/100th of a time that one branch potentially will take. Also, the cost of delivering the services through whether it is a small finance bank or the payment banks or the CSPs or the fintech or the digital service providers, the aggregators, the cost of transaction has come down substantially, and hence, going forward, this will become, it has become much more easier to reach out to large number of customers without investing too much into the fixed assets or creating too much of or very capital intensive kind of a business. And most importantly, customer service. The accessibility for the customer has become a game changer, because now it is available at your fingertips, and you don't need to travel 25, 30, 40 kilometers to visit the branch or a bank or any formal financial institution. So these are the technology and the data is going to change even the future of microfinance. The way the microfinance, if I just relate how it was happening 10 years back or 5 years back, even pre-corona, and how it is happening now, microfinance also has moved to a complete paperless uh, delivering of services or disbursement of the loan. And I'll very briefly talk about some of the technology things that have already happened, and some of the things that is likely to happen, which will shape the future of microfinance. To be very specific, how microfinance has grown, and I was mentioning that from few 100,000 crore to 17,000 crore was the portfolio of microfinance in 2012. And after the regulation came in, after the credit bureaus were established, and after a lot of technological intervention that happened, you can see the kind of growth that has happened. So between 2012 and 2017, the portfolio grew from 17,000 crore to 1 lakh crore. But in 3 years, the portfolio doubled. And between 2020 and 2024, again, the portfolio almost doubled. So all this became possible with a lot of this digital, regulatory, and technological interventions. So as we speak today, the microfinance has reached out to about 7.5 crore plus unique customers. 70% of these customers are rural customers, and they will continue to grow at least at the rate of another 10% for a foreseeable future. Um, so if we have covered 7.8 crore, and we are talking about the households, and if you take India's population as about 140 crore, 150 crore, and if the average family size is about 5, there are about 27 to 30 crore households that we have, of which microfinance has already reached out to more than 7.5 to 8 crore households already. So what is going to happen next? So not those customers who come in as a microfinance customer will not continue to stay as a microfinance customers for rest of their life. They will also go through that life cycle change, or the next level of their life cycle. And over a past decade, we already saw that how the numbers have changed. And a lot of these customers are maturing. A lot of these customers are graduating. Also, with the usage of social media, the mobile thing, the awareness and aspiration of customer is changing big time. Particularly after Corona, and I have personally experienced how things have changed in last 4 to 5 years. So the customer who was earlier only thinking about buying, for example, a cattle, is also now thinking of buying a two-wheeler, or thinking of buying a better television, or thinking of buying a better house, or wanting to send their kids to a better school, or they want to have a proper toilet built in their house, because of a lot of awareness and aspiration in this set of customers. So over a past decade, the consumption, MSME, and microfinance loan in our financial services universe have seen a substantial growth. Uh, Also, the growth has happened and likely to happen in future is in the housing loans, because of the low interest rate, lot of urbanization happening, enabling government policies where a lot of subvention is given, particularly in the affordable housing segment. A lot of growth will also happen. So all these microfinance customer, if you look at their future, they are going to, become, with their track record, if they have taken 2, 3, 4, 5 loans, they are going to be the potential customers who will be availing all the services. And hence the scope of microfinance and the way we are thinking and seeing the microfinance also will have to go through a lot of changes. And we also will have to grow as microfinance institution with the changing aspirations of our customers. And that means there will be enough requirement of home loans, personal loans, which will be driven by the technological advancement, the changing consumer behavior, the middle class aspiration changing both in urban and rural categories, growth in the two-wheeler categories, growth in auto loans, and consumer durables and credit card. So something which was always considered to be the products for the elite, for the white collar people. Eventually, these are the kind of products which will also uh, be available, and there will be a potential to do these products even for this set of customer. Something interesting. I thought, some little bit of data here and there also would be interesting if we have to see the future. India is the fourth largest economy already. Uh, and one of the most important data point that we keep talking as a country and as an economy is we are one of the youngest population economy. The average age of our population is about 27, 28 years. And this means that at least for next 10 years, uh, and this is at least 10 years younger than most economies, but at least for the next 10 years, there is going to be enough demand for a lot of products because, after once people are in this age bracket, they have at least reached that certain maturity in their professional careers also. They will get married, they will have kids, they would want to have a better house, they will require health, they will require something for education. So, and this is going to be no different for all the segments, and including the segment that we are talking about, which is bottom of pyramid, vulnerable, woman, rural. All that segment also has got very similar statistics. And for next 10 years, we are going to have huge demand for most of these products. This also coupled with the kind of GDP projections that we are making for ourselves. In a worst year like this, also we are going to be growing at least about 6.5%. But the government is projecting to grow at about 7 to 8% to reach 19 trillion economy. And 19 trillion comes with the fact that when we reach that level, we also become a developed country, and that is the vision, uh, the broader vision that we have. Creating about 90 million jobs by 2030 and 600 million by 2047. This is also part of a vision document of the government, and this will also create a lot of demand for the new products and in the age group and the population that we are talking about. Uh, One very important uh, thing that is likely to happen is a lot of work will happen on sustainability and on climate. So a lot of investment and a lot of our efforts will go on climate adaptation, mitigation, and transitioning to the more climate friendly practices. And that will also require huge investment. About 600 billion is the kind of investment that will be required. Also, our per capita income, which is extremely low, if we want to raise it to the level where the country and economy is considered uh, developed, uh, there is going to be a lot of requirement, for all the products that we are talking about. Also, current gap in MSME formal funding. That is going to be a lot of self-employed people. All the excitement that is happening on startup, MSME, and government's focus on creating jobs and MSME's role into that will also mean that there will be a lot of opportunity in MSME segment. And in the context of microfinance, customers who have been a microfinance customer, and if they start doing good, a lot of these customers will migrate from being a microfinance customer to become a small and medium SME kind of customers, and there will be a huge potential to fund those customers and be available for them when they need you for their next growth stage. Women's contribution in the GDP of India is just 18%. And if we want, and the population of women is close to about 48, 50%. So half the population only contributing 80% to the GDP is a big problem. And if we really want to grow, contribution of women is going to be very important. And microfinance has a huge potential and a great opportunity to contribute to this particular aspect, because microfinance essentially is working with all the women. All the customers are women, and hence their ability to uh, take them to the next level and contribute in a larger scheme of things will also be a huge opportunity for the sector. Very briefly, I'll touch upon this concept, and maybe you can do some more research on this concept, which is going to be, when you talk about future, it is not just the financial inclusion, because we have already reached 64% on financial inclusion agenda, and I'm sure in next 2, 3, 4 years, we will be very close to 90, 95% on the financial inclusion. But financial inclusion is about, just being able to eat today and having your very basic things available. The next thing or the next big opportunity is going to be the economic inclusion and not just the financial inclusion. And the concept of economic inclusion is a very new concept where we are talking about, people reaching to the next level where, there is, it's not just social security, but where people want to have proper house, proper health, proper education, and uh, they move from a very basic or the very basic level to at least the next level, where they are able to survive in a decent environment. There is a uh, they are able to send their kids to the decent school. They are able to pay for their health. They are able to buy insurance. So that is the kind of economic inclusion that is going to be the way forward. And if you look at the G20 countries, half the population in G20 countries live below the line of economic empowerment. And India is one of the bottom on that. I have not mentioned India here in the context, but India is one of the worst countries when it comes to the line of economic empowerment, even in the context of G20 countries. But this is more futuristic, but an opportunity for the microfinance and financial services overall. So, just to sum up the opportunity, uh, it's going to be a huge opportunity in agriculture, and 70% of the customers in microfinance even today is coming from the rural areas, and microfinance can play a huge role in agriculture. And since all of you are agriculture students, you are well aware that the contribution of agriculture is just 17, 18% versus about 50, 60% population being dependent on agriculture. Agriculture will become even more critical in the days to come, given the geopolitical situation, the climate related events, and the increasing population. And as a country, since we are predominantly agriculture economy, uh, this is to my mind, one of the biggest opportunity, uh, uh, in whichever ways you look at it. And whenever there is an opportunity, the funding is a center piece for all these opportunities. So, whatever you are trying to do, funding is very important, and hence, microfinance also can play a huge role in being with this sector or supporting this sector like never before. MSME, I already spoke about. This is also going to be very important because if we have a young population, uh, they also need to be gainfully employed. And there are not going to be many job opportunities. So people becoming entrepreneur is something that we will have to promote, and hence the requirement to fund them also is going to be enough. Climate, I think that's one of the biggest item on the table. Uh, Not just from the threat perspective, but also from the opportunity perspective. And women empowerment and the population. So these are the five biggest opportunities that I am seeing from the futuristic point of view. Something on the how digital is working in this space that we are talking about, and all these opportunities. What is happening at a ground level in terms of technology already, from a pen paper brick and mortar structure kind of a thing. We have uh, most of the companies, including the microfinance companies, have moved to a digital onboarding, and this also means that you are able to disburse faster, you are able to validate a lot of things, including the KYCs. So KYC validation is also now happening using the artificial intelligence, where you are able to, there are aggregators and you upload the document and you are able to get, so there is no manual intervention even here in validation of KYC, even for the bottom of pyramid customers. Credit bureaus are so well integrated in most of these processes that you don't need to even read the reports. The artificial intelligence will tell you whether the customer is pass, not pass, a good customer, bad customer. A lot of credit scores have also started being relevant with this set of customers. It was always very relevant for the white collar customers, but even for this set of customers with a lot of credit bureaus and a good 10-year history of data, this is also becoming one of the very strong enabler of the credit in the rural segment and in the bottom of pyramid space. A lot of utilities, like you can validate bank accounts, paperless signing of agreements. So the entire process is end to end, already gone paperless. All the documents are available at click of a button. The digital collections have started happening. So microfinance is predominantly a very cash heavy, high customer, already moved to digital and entire processes. Even the collections are now becoming digital. And once this entire, or the smaller SMEs, all the segments also can really take advantage of this. There is something very interesting coming up, which is called Unified Lending Interface. And when you talk about future, you just can't miss about what future is all about. So this is again like UPI. ULI is a new platform, which is right now at a very nascent stage, but it talks about integrating all the data that is available. And again, it is a consent-based thing. So customer can decide whatever data they are okay sharing with whatever kind of funders that they are approaching. And this will also include a lot of data available in the public domain, whether it is related to your digital transactions, whether it is your medical and health records, land records, financial transactions records, your educational certificates, a lot of subsidies that you have availed from the government. A lot of data is going to be available. So ULI will become one platform, which eventually, so historically, microfinance has been a sector where the lending happens without seeing any data. The microfinance was born out of that requirement that the customer does not have any data, customer does not have any proof to give, customer does not have any KYC documents. So in last 20 years, we have come a long way. And now a good robust data on KYC is available. And a lot of now with the creation of UPI and a lot of things going digital, the future is going to be a lot more digital than what we are seeing today. And an interface like ULI will be sort of, consolidation or aggregation of all your digital footprints that you have left, uh, wherever. It will be able to aggregate all those things. And as a funder, or as a lender, as an institution, we will be able to take much more informed call, seeing the history of the customer, whether the customer is paying electricity bill on time, whether how much customer is recharging their mobile, how frequently they are recharging their mobile, all sorts of data that we are knowingly, unknowingly leaving in the universe. The digital footprints are going to be available. And with consent, we will be able to share a lot of data. And this set of customers also are leaving a lot of data as of now, where a lot of models are already in process of coming up. But ULI will make sure that all the data will come together to where you can take more informed credit decision on the customer. So this was broadly on how the future of microfinance looks like, how the technology is likely to play a role. I'm not talking too much on the regulation because uh, you know the regulation in terms of microfinance as of now is much simpler. That anybody who has got an income of 3 lakh rupee is a microfinance customer, and they cannot borrow more than certain amount of money. The Reserve Bank is very mindful of the fact that this is a vulnerable segment, and they don't want people to get into that over indebtedness, leading to a lot of other crisis situation. So regulation right now is very simple, and microfinance companies are highly regulated entities at this point in time, uh, because we are dealing with vulnerable communities. They are like low hanging fruits for a lot of people. Uh, but eventually, when it becomes much bigger and larger industry, this will also become sort of mainstream. And we expect that a lot of things that is happening for the mainstream will also be applicable to this. So I'm not talking too much on the regulation, because I don't think it will be very relevant for somebody to remember that what is qualifying and what is non-qualifying assets, how total assets are different than the net assets, and those bigger technical terms. But I want to leave with one thought. I want to end my presentation, and I'm talking from the woman point of view, that we are contributing only 18% to the GDP. And if you want to really realize the dream of Viksit Bharat by 2047, unless we as women contribute, uh, this dream is not going to realize. So, with that as a thought, I am ending my presentation. Thank you very much for hearing me out. Um, I'm happy to answer any questions that you have on this presentation, or anything that I have missed out and you want to know very particular to microfinance or to financial services, or anything that I can potentially answer. So over to you, madam.